Age Radio.
Hey, good morning, everyone. It's Carol McManus, America's LinkedIn lady, and I'm so excited that you are with me today. And you're going to be excited, too, because my guest has some fabulous, fabulous information for you business owners out there. And also, obviously, we're going to talk about social media. But I always like to give you whatever the hot news of the week or of the day is, and there's a big one today, and it just absolutely caused me to chuckle. Facebook is decided that they are not going to allow Google Plus to unseat them and take advantage of what has been one of their sort of handicaps or disadvantages. You probably heard me say a few weeks ago when we were chatting about Google Plus that one of the big reasons that it was going to be different and better than Facebook was that you could organize your connections into categories to make it easier. Are these friends? Is it family? Is it colleagues? Is it clients? Is it potential prospects? And that was a huge thing as a differentiator because that was always one of the objections with Facebook that you couldn't organize your people. Well, guess what, folks? Facebook has stepped up. They announced either late yesterday or early this morning, I'm not sure when the formal announcement was made, probably yesterday, that they are going to allow you to do the same thing. So if there's only certain pictures and certain things that you want to share with a very intimate group of folks, I would highly recommend that you at least organize those into a subgroup and have those conversations that you don't want to be seen by other people who may be your followers. And this is particularly important for those who have profiles and not pages. Pages, as we know, is totally different landscape, but with your profile, there's messages that are not appropriate for everybody who you have friended. So that's the news of the day. But I really want to get to my guest today because, again, especially for you business owners, I think you're going to find this hugely important. My guest is Chris Lanus with Versant Funding. Welcome, Chris. Delighted that you're here.
Thank you for inviting me, Carol.
And I'm going to let Chris tell you about his business and what it is, but here's the teaser. The teaser is if you've gone to your bank and your bank has said, you're a nice guy, you've been a loyal customer, we love you, but we can't lend you any money to help your business, there is an alternative, and Chris is going to tell you all about it. So, Chris, tell us a little bit about you and Versant Funding, and then we'll get into some details for people.
Oh, that sounds great. And Carol, you described it perfectly in that the type of client that we're able to help is the client that's already contacted their bank and the bank just can't help them. I sort of fell into this branch of financing almost by accident. My background is primarily in traditional small business lending, SBA lending in particular. I've held roles in documentation, credit underwriting, operations management, business development. I was with CIT most of my career. Mm-hmm. We were the largest SBA lender for a number of years. And then I moved on from CIT to a smaller competitor thinking, well, maybe I could help this smaller competitor grow and be something like CIT was in its heyday. Well, I did that right as the credit crunch hit.
Right.
And this was a company that needed securitizations to fund its business. So make a loan, sell a loan. Nobody was buying loans, so we couldn't make any loans.
Right.
So the business sort of faltered for a while. It struggled. But there was an affiliate to this business that did factoring. And factoring remained fluid, remained liquid, remained very actively funding businesses. So we decided, well, maybe this is where I should be spending my time. So that's what I started to do.
So for our listeners, define what factoring is and why it's different.
Factoring is a type of financing for businesses that don't qualify for what's out there traditionally. It's not a loan. What factoring is, it's really purchasing assets. A factoring company, like Versant, buys the accounts receivable of a company. Mm-hmm. So a company makes a sale, they sell a product, they sell a service to another company, and they invoice for that product or service. Now, ordinarily, that company now needs to wait to get paid.
Right.
A month, 2 months longer to get paid.
Right, and receivables have gotten longer and longer because everybody's trying to leverage those dollars.
Exactly, and also the bigger the company, the more they try to squeeze their small suppliers. But when they have those receivables, but they don't have cash, and they have a bank line of credit, well, they can dip in that line of credit as they need to meet their working capital needs. Our clients don't qualify for that line of credit. So what we do is when they invoice that customer, they give the invoice to us. We verify it by contacting their customer, making sure it's a true invoice, and then we advance them 75% of that invoice amount immediately. So they make a sale, and day one, they have 75% of the cash to pay their employees, pay their suppliers, keep their business going. And now we collect from their customers. That invoice or that receivable is now ours. We own it. We're responsible for it. We collect when we get paid. We then give our client the balance, that remaining 25%, taking out our fee. And our fee accrues depending how long the invoice is outstanding. Typically 2.5% to 3% per month is the fee to the client. So if you have an average customer, getting paid on average in about 40 days, they're going to take about a 3 to 4% discount on their invoices. And that's the cost of this financing that we provide them.
So it's expensive by comparison of what you might think of for traditional line of credit or those kinds of things. However, it solves a very immediate problem, which is cash flow, which is always what businesses are up against.
That's exactly right. We have this discussion with our clients all the time, particularly if it's a client that's had a bank line and they're paying prime -1, which is like 2.5% right now.
Right.
So our financing looks very expensive in comparison to that. But if you compare it to the true alternatives that our clients have, it's not expensive at all.
Right.
The alternatives our clients have are take on a partner, give away equity in your business. So now you've lost not only ownership, but potentially voting rights in your business to raise this capital. And that can be forever. Or they're foregoing business. They're turning away business that they could otherwise do. But our financing typically allows them to, for one, retain ownership and control of the business and hopefully take on new business. And our clients, if they're using our financing, they've probably got pretty decent profit margins. So by using us, let's say their profit margins were 40% before. Well, now by using our services, they're taking on this new business, and instead of making 40%, they're making 31, or they're making 35% profit margin. So it's still, they're going to make business, they're going to do incremental volume by using us. But again, we're only expensive if you compare us to banks. Banks aren't an option for our clients.
Yeah, exactly. And it's comical, but we've heard for years that the banks are always willing to give you money when you don't need it, but they aren't there to support you when you do need it. So you mentioned when you were just talking there that you have direct contact with their client customers. And I can imagine that would make business owners pretty nervous. So how do you interact with those customers to put, first of all, your client's mind at ease and don't do anything to jeopardize those relationships? Because obviously I would think that the fear of a business owner would be that my clients are going to think I'm in trouble.
You're absolutely right. And I can tell you it's a concern 95% of the time when our clients come to us. They go, you're going to be talking to my customers? Oh, I don't like that.
Right.
Well, there's a few things we talk about with them. Well, for one, it's in our joint interest for them to have a good relationship with their customers. The more business they do, the more repeat business they do, the more volume we do together, the more money we all make. So for one, we don't want to do anything to damage the relationship. Secondly, because our clients are usually worried, well, what are my customers going to think about this, that I'm entering this type of financing? Well, for one, factoring isn't the dirty word it once was in the finance business. As traditional bank financing has been tougher and tougher to get, more and more clients are turning to this type of financing. So it's not as unusual as they think. And particularly for a client of ours that's selling to a big company, well, the odds are excellent that big company is already sending payments to factors for many of their suppliers. So it's typically not even that unusual. They're already doing this. And we also frame it in a very positive way. Very early in our process with our client, they're going to send a letter to their customers on their letterhead explaining we've entered into a financing arrangement to help fuel our growth, and going forward payments will flow through Versant Funding. Frame it very positively. And we also give our clients a chance to talk to some of our existing customers, every one of which had this concern when they came to us. And they can talk about how we work with them, how we were gentle in dealing with their customers. And we are not a collection agency.
Right.
While we're buying receivables and they're ours and they're our problem and we will collect them, we're not buying invoices at 10 cents on the dollar and pounding customers to get paid.
Right.
We're going to collaborate if there's a payment problem. If there's an unusual flow with one of their customers, our first call is to our client. Well, what's happening here? And maybe there's a dispute that they're working through, and maybe our client wants to buy back that invoice, and they'll handle it. Or maybe our client has decided, I never want to sell to this customer again. You do everything you need to get paid. But the point is, we're going to collaborate. The first thing we're going to do is figure out how to handle it. We're not going to just start demanding payments or sending nasty letters and threatening phone calls. We're going to work with our client to determine the best way to collect a sort of out-of-term invoice. So
the obvious question is, because I can imagine there's a lot of people listening to this who are saying, I could use this right now. But there has to be an ideal profile or not, maybe not even ideal, but a profile of what are the types of business that make good candidates for factoring? For one, it needs to be a business that sells to other businesses. I really can't do much for a retailer because I need a business that has commercial accounts receivable on their books. Okay. So the industries that we often work with are manufacturers. Staffing companies can be great because they've got all these people they got to pay, but they're still waiting to get paid by their customers. Consulting, distributorships. It really runs the gamut. I can tell you what all of our clients have in common. Can't get bank financing or can't get enough bank financing. Let's put it that way. Sometimes they have a bank facility, but it's not enough to get them to the next point. They have good customers.
So good quality customers, something we didn't talk much about, is since we're buying a receivable owed by another company, I need that company to be creditworthy. I need that company to be strong.
Sure.
So that's another important component. And they've got good margins because our financing, like you said, is not very cheap. So if a business is getting by in a few percentage points profit margin, well, they can't give me a few percentage points to
and
do
still
the deal.
make a profit,
So
right?
they've got to have decent profit margins. 15, 20% or greater is usually the target.
So when these funds come in, are there limitations or guidelines as to what the company can use those funds for?
Not at all. Again, we're not a bank. We're not putting controls around our clients. So when we factor invoice for them and advance them cash, it's up to them how they use it. I can tell you what we commonly see clients doing with the cash, just meeting day-to-day operating expenses, much the way they would use a bank line of credit, factoring more invoices when they need more cash to do those things. Some may be using it to fund some bridge need, some short-term need, or fund a project that's going on right now. But it's up to them. It's up to them to use the funds as they choose. But we're usually seeing it that people are using the factoring facility much the same way they would use a bank line of credit.
Okay, which is for the most part to pay the bills.
Exactly.
And maybe some minor expansion things, but this is not to go buy a boat.
Right. That's not usually what's happening.
Okay.
They could do that, but that would be a short-term fix.
Yeah, that only gets them into bigger trouble. Okay, so what information should a business owner expect to provide? Let's say I've got listeners right now who are saying, okay, gee, I think I want to talk to Chris. This might be a solution that I'm looking for. So what do they need to supply you to get approved for factoring?
I mentioned that my background was in more traditional small business financing. I was doing SBA loans. So government program, I was used to accumulating, a good 6 to 12 inches worth of paper to get an application. And I wish I could say I was kidding, but I am not
You're
kidding.
not, right.
So this is the opposite of that, essentially. And it's taken me some time to get used to this. But with a few sheets of paper, I could typically let a client know if I can help them. Because we're all about receivable, that's what I need to know about. So I don't want tax returns. I don't want financial statements. I don't want a personal financial statement or a credit report. I want an account receivable aging and tell me who your customers are. That's enough to give me a real good idea if I can help. Now, the next couple things I need to know, is there a lien on the receivables? Because those are ours. We need to make sure we can get a first lien on those receivables.
Sure. So
if there's a bank line in place, well, we might be able to work with that and negotiate a agreement with the bank to work with this client. And then I want to know what the margins of the business are. So if I can see, can they afford this type of financing? But with those couple pieces of paper and the few questions answered, I can typically that same day tell them if we can help them.
That's huge. That it would be music to a lot of people's ears. And again, for those of you who are listening who are in a situation where cash flow, you've got a solid business, you have the receivables, but you don't have the money in hand, but yet the bills keep coming in the mail every day or through your email, right. This could definitely be a solution. So we're at a perfect break point here, and I want everybody to sort of take a deep breath and think about this. But the next obvious question, we'll deal with this when we come back from break, is how long does it take this process? Because I'm thinking of mortgage lending, for example, where you used to be able to get a loan maybe in a couple of weeks, and now a couple of months is not uncommon. So we'll come back with that when we come back from the break. I just want to leave you with a little teaser. This is Carol McManus, America's LinkedIn Lady, here today with Chris Lanus. We'll be back in just a moment.
From the WGCH Weather Center, I'm meteorologist Dr. Bill Evans with your Doppler weather radar forecast. WGCH brings you weather more than 100 times a day. You're going to enjoy another summer-like day. Here we are at the end of summer, but it's going to feel like late July again. Sunshine, warm, and humid. The high is going to be around 84. Could be a scattered, spotty pop-up thunderstorm late in the day. And then we're going to be looking at some cooler weather. We'll be into the 60s by Friday, Saturday, and Sunday. A nice, cool fall-like weekend is coming up. I'm meteorologist Dr. Bill Evans for 1490 WGCH.
Every business today must have a presence on the internet to compete. Carol McManus, the LinkedIn Lady, is an expert who has first-hand experience on growing a business using the free elements of social media. Visit LinkedInLady.com. That's LinkedInLady.com. It's no longer just about a website. It requires a comprehensive and clever integration of communication and interaction with your client. Carol McManus, the LinkedIn Lady, will teach you the most efficient and effective way to start today with the resources you already have at your disposal. Social networking is about building relationships. It's not about selling. The effective use of social media will draw clients to you like a powerful magnet before you ever offer your services. Carol McManus, the LinkedIn Lady, has new ideas to incorporate social media into your business. Visit LinkedInLady.com. That's LinkedInLady.com.
Hey, welcome back to the LinkedIn Lady Show on 1490 WGCH. This is Carol McManus. We're here today with my guest, Chris Lanus of Versant Funding, and we're having a really, really interesting conversation about how businesses with receivables can get lending when their bank has turned them down. And Chris has been sharing some great information. Where we left off just before the break was, how long does the process take?
And again, coming from an SBA lending background where you measured turnaround time in weeks and months, we often measuring it in a matter of a few days. I mentioned earlier the information I would need to assess a client. Typically, once I have that information, that same day, the next step is usually I'm putting together a conference call with a decision maker at first, and so we can figure out, can we do this, how we would do this. That's usually happening that same day. We can then get a proposal to a client a few hours later. If they accept the proposal, and there are no surprises along the way, basically what we're told turns out to be true,
right, sure.
We can be in a position to fund in 3 to 5 days later.
Wow.
And we're working on that right now for a client who's in some dire straits, and we're hopeful to get him the financing he needs in a matter of a few days.
Yeah, and again, I think that's the one of the things when I first met Chris that so impressed me about what he does is this is not here to gouge companies. This is here to keep your business going and keep it viable and keep you in business. So for those of you who are struggling, who are staying up at night wondering, how you're going to pay your bills, there are alternatives out there. And yes, they're a little costly, but that's better than the alternative. Certainly better than the alternative. So let's profile. Can you give us some examples of businesses that you've worked with and how factoring was able to help them?
Sure. I always think this is a great way to illustrate the power of factoring and who and how we can help. We were working with a client a few months ago. They were essentially a startup, brand new company. The owners of the company had experience in consumer electronics on and off. They had a couple of failed ventures in their past. That impacted their personal credit. Personal credit was very poor. They had been to every bank in town, in the country. They've been to a lot of other factors as well, and nobody was really interested. Their product was consumer electronics, and it was a sort of a new device, and they had managed to get a company in China to manufacture 10,000 of these units by putting a deposit down. But they knew they didn't have the cash to get them out of China because they knew once they got into the hands of their customer, which was a very large retailer, they were going to have to wait a while to get paid. So consumer electronics pose some unique challenges in that, well, what if it's defective and they don't pay? So it was a challenging deal to get done, but essentially we were able to factor the first invoice this company ever issued. They plow the cash right back into the company, get another round of production underway. They're about to launch a new line of product. But this is a business that never would have been able to really get off the ground. They got that first batch manufactured, but they needed the liquidity of factoring to sort of keep the wheels of production in motion.
Which is a great example, because I think this whole issue of companies that are new or startup or, almost the finish line is in sight, but they aren't there yet, that they could be eligible for this. The other one that I've heard you share in other meetings that you and I have been in together are companies that are going through a growth spurt where the bank actually freaks that they're going to be making too much money too fast. My words, not yours.
Right. No, it's very true.
So how can Versant help them?
Sure. We were talking recently with a company that sells barbecue pork, and he was selling it locally and managed to get a local location of a Piggly Wiggly to buy in and buy an order of his product. Well, Piggly Wiggly liked it, and they want to roll it out to all of their locations. And their bank is not willing to take those kinds of risks and have this really, really steep growth cycle that goes along with that. So we're talking about helping out that guy. And here's a situation where he had a nice little business doing a few $100,000 a month in revenue, but we can really help take him to the next level by him bringing on this really potentially huge client for him.
That's very cool. And I'm laughing to myself because I'm thinking, why would a bank not see that as a huge opportunity for additional revenue? I mean, their nets are going to increase also if this person keeps putting money in the bank. But anyway, that's another story. So one thing you alluded to, and I don't want to avoid this for the listeners, because you mentioned some factoring companies don't have good reputations. Versant does. How do you differentiate yourself from other companies?
Well, I can tell you one of the things I've loved about working with Versant is my background was primarily working for very large companies. Well, with a large company comes a lot of layers. a lot of bureaucracy, a lot of hierarchy. I have very easy access to a decision maker. The owner of our company is intimately involved in the day-to-day operations. When I come across a client, after I initially determine they're viable, very early, usually within hours, sometimes minutes, like I said yesterday as an example, we're on the phone with the owner of our company, figuring out, can we help you? If so, how? And then very quickly moving on to proposal and funding. We're flat. I think that makes a huge difference. Also, a lot of factoring companies are very, very small, like us, but they're also very thinly capitalized. They themselves may be reliant upon another bank to fund them. So not only do you have to get approved by the factor, but then by the bank. But then the bank also puts all kinds of restrictions about how big and how much concentration you can have. We don't have those restrictions. So we're able to be very nimble, react quickly, but also do some very large deals, some very complicated deals that other factors weren't able to or willing to do. So it's our small size, our easy access to decision maker that I think really makes us easy to work with. And of course, we can't help everybody. But what I love is that if I can't, I'm going to know very quickly. So that client can move on to other options.
Remove the pain, remove yourself from the obstacle. But I also know you're very, very big on customer service. So how you interact, you're going to have Chris in your court, if it is somebody you're going to work with. So my last question before we move to social media is, obviously accounts receivable is a big piece of this. So from a tip standpoint, if a company is out there, if a business owner is listening to this and saying, gee, I think I would qualify, but my records maybe aren't the best, or what can they do to manage their accounts receivable to make it more attractive to and manageable for you?
It's amazing that we see very often that clients somewhat neglect their receivables. For a service company that they don't have much in the way of plant or equipment or any kind of hard assets, receivables are often their most valuable asset. But you'll see they don't spend much time tracking, monitoring, reporting, paying close attention to what's in their receivables. So I think data, information is very important. Having a good system to keep track of what's in there, what's your receivables.
What's been billed, right, what hasn't been paid.
But then even a step before that is be careful about who you sell to that brings you that receivable. Now, you'll probably see this as well as I do, but a lot of small business owners, they're salespeople. The reason they have a business is they sold people on investing in their company. They are selling their product.
Right.
So they don't want to say no when somebody wants to buy their stuff. Somebody wants to buy my product, I'm going to sell them my product. Well, maybe that company can't pay for your product.
Right.
Do a little research. Not everybody should qualify for credit from your company. Check them out before you allow them to basically pay on credit.
Or let them earn the credit and maybe treat new customers on a cash-only basis.
Very, very true. Or something in between those two things. Or like you say, make it an evolution to credit. But we see customers, or clients, get so excited that somebody wants to buy, I'm going to sell. So be careful before you do that. And be wary of concentrations, customer concentrations. We've seen some companies get into trouble because they've got a big customer and they want to service that customer. They want to keep them happy because they're big and they're going to buy a lot of their stuff.
So all their eggs are in one basket.
Right. In the meantime, they neglect all their other customers and they're just left with that one that gives them a lot of power. Power over pricing, power over terms, that can put a business in trouble. And we have seen it put businesses out of business because they had too much with one company that sort of changed the game on them. And in turn, they were left with nothing.
That's scary. Well, Chris, I can't thank you enough for this information. I'm sure my listeners feel the same. But as always, we always look forward to the portion about social media. And I know you are a big LinkedIn user. Tell me about social media and how that helps you support your business, helps you attract new business. What are you doing?
Well, like you said, LinkedIn has been great for me. I can actually credit you for a lot of that. I've taken a lot of tips for you on how to better utilize that tool. But another great thing about working for this company is we're national. So I can go anywhere. So LinkedIn's national platform is helpful in that regard. But what I try to do, and again, I took this from you, is stay visible. That I forget the number, 120 million members, whatever's on there right now, but a small percentage of them do anything. So with a little bit of effort, you can become very visible. And that was a message I took away, and I've been doing that little bit of effort every day. And we talked about this earlier, blogging sounds like a great idea, but I don't have a lot of time for that. I don't know that I'd be very good at it. So what I do is I just share information that I've found, other people's content, Wall Street Journal article, Times article, Entrepreneur.com article, and every day I'm posting stuff. I post it on my profile. I post it in various groups I belong to that I think complement my business. And people comment. And when they do, I see who they are. And if I think we can help each other, I reach out. And that connection, and again, people usually accept my invitations. I don't have a lot of rejection. But we may get together face-to-face if they're local. We may have a phone conversation. If they don't want to talk, well, they're in my database now, and they're going to get messages from me through email, possibly by postcard. So I'm going to stay in contact with that person that I've met on LinkedIn.
And I'm so glad you said that, because that's the piece that most people forget. Social media is an entree. It's a way to get people to know you, know about you, and begin to like you, hopefully trust you, to take that relationship into what would be more traditional methods. You mentioned email campaigns. They're in your database. You may meet them for lunch or coffee. It obviously depends on who you are, what your business is, and what's appropriate. But always go back to thinking of social media as the funnel, as the place to cement those relationships. I pay close attention to everything Chris does on LinkedIn. It really is valuable information. So we definitely want you to reach out to him. Do you use anything besides LinkedIn?
I've been dabbling in Twitter, sort of as a compliment to LinkedIn, in that I'll tweet an article and I'll also post that on LinkedIn. I've been playing with hashtags on Twitter, and I'm finding it does reach people that I did not know would find me otherwise. So that's helped me to a limited degree, but that's as far as I've gone. You were talking about Google Plus, and honestly, it makes me a little nervous that I'm not in there yet, because haven't been invited yet. But once I am and I can get in there, well, now here's going to be another thing for me to manage.
Right.
Because I do hear good things about it, and I'm curious to see how powerful it can become.
Yeah, and it's still going through, it's still, even though it's large immediately, it's still in its infancy and sort of fleshing it out. But the people in the space are very, very optimistic about what Google's going to do. And because it's Google, there's that enhanced level of anticipation that it's going to be successful. So again, my listeners have always heard me say, the 5 fingers are LinkedIn, Facebook, Twitter, YouTube, and blogging. But you really do need to add that 6th finger now that Google Plus is out there. And of course, there's other things depending on where you are. And it's thank you for the opening, because it's a good chance to remind people that if you're in the international markets, you may want to be on Orchid. If you have multiple businesses, you may want to have Squidoo lenses. If you want another enhancement as to how to manage your database, you should be on Plaxo. So there are other viable options out there, but I tend not to talk as much about them because people go into overload. Just like you said, I'm dabbling in Twitter, but I can only manage this. My advice always is to pick one, get comfortable with it, make sure it's the right one, that it's appropriate for your business, and then once you master that, you can add on. But you made an important point. You can manage Twitter directly through LinkedIn. If you just keep up on LinkedIn, you can feed it to Twitter and not even worry about Twitter, because it will do it for you. I just did that this morning when I was posting our show. I talked about it on LinkedIn, and then I put it out to Twitter. So it goes in both places. It's a good time manager without using a service to prompt and promote. And that's another show and another conversation. So any last thoughts? I just want to go back to the bigger topic, and I also want to make sure we give contact information so people know how to get a hold of you. Let's do that first. Okay. So how do you want people to find you, Chris?
Best way to reach me is by phone. The phone number follows me where I go, 203-493-1663. And there's also always my email. It's cleahnes, that's CLEHNES, @versantfunding.com.
And Versant is VERSANT. And I'm going to repeat that cell phone number for you again. It's 203-664-1535. That's the one. That's
my cell.
Yeah, okay. We always have all these numbers that we have to worry about. But anyway, Chris, this has been an absolutely fabulous interview. Last thought, what's the one thing that people should take away from this interview?
Well, that when the bank says no, it's not over. Keep looking, find professionals, ask your banker for alternatives, ask your trusted professionals like your CPA or your attorney. They will know about things like factoring, things like the service I provide.
And just on that point, just one thing that I want to sort of throw in here is this doesn't impede your existing relationship with your bank.
Not at all.
That's still going to be there, and you're not going to need Chris maybe forever. This could be interim, it could be ongoing, but it's not a substitute for the bank. It's an enhancement too. It's a partner with the bank.
Bankers are a great complement. I do lots of business with banks. They're a great source of business for that reason.
I love that. Well, Chris, thank you so much. We are getting ready to close out today's show. I just want everyone to know that next week I will be broadcasting from California. I'll be speaking at Craig Duswalt's Rockstar Marketing event on LinkedIn, obviously. But for anyone on the West Coast who does hear this online, please check out CraigDuswalt.com, CraigDuswalt. There still are seats for that conference. Starts next Wednesday night and runs through Sunday. And if you want to become a rock star in your industry, this is the conference to attend. So signing off for today, this is Carol McManus, America's LinkedIn Lady. I am so thrilled to be with you every week here on WGCH, 1490 WGCH, and I wish you quality connections and natural networking. Have a great week.
Grab the wheel of a BMW 535i xDrive sedan.